This episode is brought to you by Suzy, a cutting-edge market research software platform that empowers some of the biggest companies in the world, like Citibank and Procter & Gamble. To find out more about how Suzy can help you stay competitive, go to tearsheet.co/Suzy. Welcome to the Tearsheet Podcast, where we explore financial services together with an eye on technology, innovation, emerging models, and changing expectations. I'm Tearsheet Editor-in-Chief, Zach Miller, and today we'll be diving into the intersection of artificial intelligence and automation within corporate finance, especially how AI is transforming the way businesses manage and understand their spending. Our guest is Geoff Charles, Chief Product Officer, and we'll talk about that new role as well, where he leads product management, operations, and support teams at Ramp. What makes this conversation particularly interesting and timely is how companies like Ramp are evolving beyond traditional expense management to become really like intelligent financial partners for businesses. And about Geoff, with over a decade of experience in financial services across both B2B and B2C, including scaling credit products to millions of customers at Mission Lane, Geoff brings valuable perspective on how to balance innovation with trust when it comes to AI and finance. And we'll explore how transaction data is becoming a gateway for broader AI adoption in business and what it takes to build products in this rapidly evolving landscape. Welcome to the show, Geoff.
Thrilled to be here. Thanks, Zach.
So it was news to me that you did get promoted to Chief Product Officer. I know I would like to talk about that before we jump into stuff. Maybe talk about your if there is an expansive role there, and I guess what the trajectory has been through your career to get to CPO.
Yeah, thanks. I don't really rely too much on titles, more on impact. So it's more of a label than anything. I joined Ramp. We were about 10 people. My title was actually product manager. It was a bet I was taking the company. It was a bet that the company was taking on me. And over the last 5 years, I've kind of proven out that I was able to build great products, hire great people, and build a culture of innovation and velocity. And so have kept increasing kind of my scope at the company. And as we become a larger organization, it's important to continue maintaining technology as the prime reason why we win. And so promoting or inflating titles of people who are leaders in that space, depending on how you see it, is important. So we promote a CFO to make sure we're audit ready and make sure that we are driving financial performance. We promoted our engineering leader to EVP to continue bringing in incredible engineering talent, and I was part of that class to continue building great products. So same scope, same mission, same vision, same person, and excited to get after it.
Awesome, and congratulations. And I think it must say something about Ramp as well as the company matures and builds out its sort of functional areas as well, right?
Yes, I mean we're continuing to really push leaders to build capabilities with their reporting lines, right? So with those titles and with those promotions, it enables essentially the folks that report into us to continue growing in their roles and their domains. So that's really important for us to continue scaling and promoting internally, which is a big part of our culture at Ramp, is to find early talent, to mentor them, to grow them, and to give them unlimited growth potential within the company.
That's hard to hire for, I guess, also as well, given the fact that you guys have grown so quickly. I mean, this is a role where I don't know if it's still a rocket ship or if you would call it a rocket ship, but it certainly was in those early days, right?
It absolutely is still a rocket ship. Yeah, we hired over 500 people last year. We're probably going to hire even more this year. And a big part of that is within our engineering organizations, our product organizations, our go-to-market organizations. So, we're going to continue scaling, and the limiting factor really is just maintaining a strong culture, making sure that managers are adequately training their employees and onboarding them, making sure that we have enough time in the day outside of interviews to do our day jobs. So that's really the limiting factor. But everyone we brought in so far is even more capable than the last class. The talent density coming out of colleges and programs today is absolutely outstanding. And I don't think I would have gotten a job at Ramp if I just graduated. So thrilled to be around people.
Yeah. How would you describe? And we've had Eric on the podcast years ago, but I'm kind of curious what the culture is like in your organization. How would you define it in the product on the product side of things?
Intense. Is maybe the word that comes to mind. I think product managers are, the pacekeepers and pacemakers of the tech organization. I think a lot of the reasons why things stall is when there's lack of decision, lack of clarity, lack of direction, lack of vision, lack of energy in the system. And so, the culture that I try to emulate within the product organization is clock speed. It's thinking about how do we get things done quicker? How do we make decisions faster? How do we bring in data and customer insights to motivate teams? How do we bring engineers to the customer? How do we bring problems and shape them in a way that's actionable? And how do we continue, pushing the pace? What are we aiming for? What's our target? How do we, aim big and dream big and bring people with us? So that's a little bit of the culture. It's one of building in the open. It's one of being deeply collaborative with your engineering counterparts, with your design counterparts, with legal, compliance, operations, partnership, and these like mini GM models that we kind of try to build with every single pod, kind of being their own mini company and mini startup. And with that comes, hiring people who are hungry, but also are humble, are kind, have a strong growth mindset, and are able to collaborate deeply with the rest of the organization.
And do you think those skills are typically innate, or are they learned? Or both? I split it into binary. It doesn't have to be binary.
Yeah, I think a lot of it is innate in terms of just who you are as a person, right? I think,
because you talk about speed and clock speed and like leading, and we have a lot of bankers on this podcast. We don't typically talk about speed. Yeah.
Yeah, I mean, look, bankers are they're workhorses, right? They work really, really hard. They actually are very fast at what they do in terms of the sheer number of clients that they serve, the quality of the work that they have to do, the depth in their analysis. That's why they're paid quite a bit of money to serve these clients, right? So we have ex private equity folks on the team. We have ex investment banking analysts, folks that have gone through programs that are quite intense, that are used to that pace. Are great to join the product organization. Typically, they join biz ops or product ops, and then transfer into the product organization after they've proven that they have the technical acumen and the customer centricity. So half of our team actually was promoted within the organization.
The financial industry depends on data, but not all data is created equal. Choosing partners who can separate fleeting trends from groundbreaking innovations is more crucial than ever. If you want to unearth what forces are shaping the industry right now, download our guide at tearsheet.co/Suzy. Very cool. So I want to get into the meat of our conversation. Thanks for sharing about your background and who you are. I'm curious to know about evolution of spend management and specifically, like I said in the introduction, how AI is impacting traditional expense management and corporate cards into like a much more proactive, like self-driving role. And we definitely saw this like on the consumer finance side begin a few years ago. And I find it refreshing to see the language that Ramp is putting out with some new products about this idea of like taking a lot of decision making and putting automation behind it so that, a small business owner or a CFO of a smaller company like doesn't, gets help from the products, and it's not just another app to use.
Yeah, so I think you're spot on, and expense management, spend management is a big space. So let me break it down a little bit.
Sure.
There's what I would call like the travel and expense category, which is all about your employees needing to spend on something. Then there's the account payable category, which is like you have bills to pay.
Bills, right?
Then there's the actual treasury category, which is like you have cash, you need to manage your cash, and then there's the overall budgeting and financial forecasting and compliance programs that you need to embed and make sure that you're spending on the right things and that you're closing your books. And so we've started on the first part. The first launch of Ramp was a smart card. It was a card that you swipe and you're done with your expenses, and we gave you a ton of analytics on your vendors. And the goal there was to say, typically you actually broke those things apart. You have credit card companies that are basic mechanic, payment instruments. And then you have an expense management category, which is a very painful process that you put your employees through, where, the idea was the more painful you make it, the less your employees will expense things, the lower your cost as a company. And then you have your accounts payable product, which again was so disjointed from the rest of the organization, where it was mainly around, payment operations for invoices. And we thought, at the end of the day, the job to be done here is how you allocate capital within the company in the most effective way. And effective meaning in a way that takes the less amount of time and has the most ROI in terms of every dollar you spend. And to go back to your question around AI, if you apply AI across all of these jobs to be done, there's so many pockets of incredible user experiences that you could build. So, for example, an expense, right? An expense is basically you filling out a form saying why you spent on this thing. You submit it, right? There's a manager that needs to approve that thing. Then there's a manager's manager that needs to approve that thing. And then there's like a controller that needs to review all that, audit it, sample some things, and make sure that they're actually accurate and within the policy. And when you think about that, AI can do all of that way better than the average employee. In fact, like our latest models that basically are coding your expenses for you are more accurate than the average employee. Why wouldn't they be, right? The average employee doesn't have a degree in finance. The average employee has a day job, and they're not hired really to do expenses. So can go deeper on these things, but we're super excited about all these things. We built AI from the very beginning, but over the last 5 years that I've been at Ramp, the LLMs and the platforms that have been able to be used are so much more powerful that it makes the products that we're able to build easier to build and way more impactful for the end users.
Can you talk about, I guess, some of the inputs that Ramp is using as you launched all these different products, as you just took us through sort of the portfolio of products that you offer? What data, what information is feeding some of the output that you guys work on? I'm kind of curious, like how you think about that.
Yeah, so let's take an example of our policy product. So our policy product is essentially saying, you have an expense policy of the company, which is typically a PDF document, and in that PDF document, you were saying, what you can spend on, what you can't spend on, and a manager
you have an approval hierarchy, right?
You have approval chains. You have exceptions for certain types of employees. You have layers of hierarchy where the higher up you are, the more abuse you can potentially.
I was going to say the hidden expense folders that nobody should know about. Yeah. The cookie jars.
And so we have all that data. We have the data of your policy. We have the data in your ERP. We actually are able to predict, what chart of account your expense needs to go to, and whether your expense is in policy or not. We're actually able to predict whether you're going to be approved for that expense, because we have all of the data running on thousands and thousands of approvals of expenses like yours within that company and within companies like yours. And so we basically feed all that into the LLM models. We're feeding policy documents. We're feeding historical transactional data. We're feeding network data. We're feeding the receipts. We're feeding the requests. So all the context that Ramp has, right? That's the most important thing. Is typically your ERP doesn't have any of the context. They just have, your bank feed shows up, your card feed shows up, and the accountant goes, how do I code this? What the hell was this for? But because everything happens on Ramp, because the requests happen on Ramp, because you have your mobile app, we know your location, we know the receipts, we know the actual requests, we know the memos. All of these things actually feed our LLM into a place where it's vastly more accurate than applying an LLM at the point of payment.
Given how much you know about your customers and the fact that AI is sort of in the background, I guess, running your products, do you see this as almost as a foothold for enterprises to adopt AI? I'll give you context. Like, there hasn't been, and again, most of our guests on the show are bankers, though not exclusively. Within the past 12 months, we've not had a guest that hasn't wanted to talk about AI. And this is at, some of the world's largest banks. They don't move quickly at products. They're very, risk averse, but they're interested and they're looking at it. They're figuring out next steps. And I'm just curious if you see that almost like as a foothold for an enterprise to start really getting comfortable with AI, because it's kind of AI in the background.
I think that's totally right. So first off, like most of the products that you're already using have some type of
Right.
right? When you do, for example, OCR on an invoice, right? There is some type of AI that parsed that out, right? Whether it's a mechanical Turk with like a layer on top or full blown LLM, someone did that work for you, right? And so the question really is around what governance do you put on top of AI to make sure that it's accurate enough, right? And the way I think about it is like there's two different dimensions. There's one dimension which is how good is a human at doing this versus an AI, and the other one is like how critical is it for it to be right. And where we started off was the quadrant where a human is not accurate typically, and where it's not very critical to be right. So expenses is actually a perfect place for that. Employees suck at it. And if you get like a coffee transaction that is coded to like team budget versus travel spend, it doesn't matter for your like financial records.
It's not going to risk the company. Yeah.
Yeah. It's a small percentage point of the financial accuracy of your balance sheet. And so, that was a place to start. And then you basically talk to these companies, and we partner with very large companies. For example, Shopify are customers of ours, and they have thousands and thousands of employees with hundreds of thousands of financial events that happen on a daily basis. And they pay hundreds of thousands of dollars for external teams to audit expenses. And you go to them and you say, listen, like, what would it take for us to remove those costs from you? What would it take for us to remove the burden that you put on your employees and your managers? And these are publicly traded companies, and make sure that you're actually compliant with all the regulatory overhead that you have. And it turns out that they have huge appetite to use AI, but in a way that keeps the human in the loop. So what's important for us when we're building AI is to know how certain are we that this is the right action, right? And to basically give the oversight to the controller to say, hey, we've done all these things automatically and we have high confidence. We've done all these things automatically and we have low confidence, and we have so little confidence that we didn't do these things automatically. And have basically workflows where the finance team understands where they need to pay attention to, and sampling so that the finance team also has audit rights to tweak the things. And then we build basically a platform that enables us to take any overrides to the AI and feed that back into our models to continuously improve. So our vision is basically to move from, say, 5% automation to 20% automation to 100% automation over time, and let the finance teams be in the driver's seat for that transition. As they see the models doing more and more, they can give more to the model to do for them. So that's a little bit of how we think about it. But where there's like high criticality and where humans are very good at it, right? It's things like you're paying a very large invoice for a vendor that Ramp hasn't seen before. How do we know that you've actually contracted that vendor? That's something that you probably want to oversee. So things like that. Just we need to be very cautious with where we apply AI and always keep visibility and control to the end user.
And do you see, I guess, the AI evolution rolling out that way? Like the easy tasks that are not critical, as you're describing, those get automated 100% at a certain point. Then in my mind, I guess a lot of what I'm hearing and what we're hearing on the show from bankers is this, like, I guess, hybrid model of human AI assisted human decision making. Maybe can we drill down on the way you describe, like the framework you described it, to the critical tasks? Where does AI play a role there?
Yeah, so I mean, as I mentioned, like the things that are less critical for your finance performance, for your financial performance, those are things that you can automate away very, very quickly, right? So, for example, managers reviewing expenses. Managers reviewing expenses is a very, very costly thing. Like an expense report, like often goes through 3 layers of approval, and your managers are not even trained on what to look for, right? Also, they're typically the ones who are like, yeah, I'll let this slide, right? Whereas an AI is way better at doing that, and it won't let it slide. And so you can point to Ramp saying, hey, it's Ramp, it's not me, right? You need to pay the company back. So those are things that are like amazing at automation, right?
AI can play the bad cop.
Exactly, 100%. And so, we're moving to a world where employees are basically having conversations with Ramp AI when they're doing their expenses, right? Ramp AI is asking them, hey, like, hey, this is out of policy. Was this for a specific conference? Was this for a specific client? Enter more information for us to like rerun the policy. This is an exemption. We'll let it fly this time. You need to pay the company back. All these like interactions are basically fully automated so that managers, spend time managing the performance of the employee, not the financial performance of their team. So that's an example of low critical tasks that are great at automation.
So what about the critical ones? I guess that's my question, is more focusing on the critical ones where AI can't take you 100%. How do you see that playing out, I guess, within the enterprise? Like, what's the role of AI in, like you said, like a huge invoice comes up or an investment decision or something like that requires, whether it's multiple inputs or there isn't a single right answer there. Like, I guess that's what humans are good at juggling. I guess in certain cases we're not good at juggling.
Yeah, I think over time we're going to have enough data for the accuracy to be just as high as the person you employed to do that task, and at that point we can automate it, right? So let's take invoicing, right? There's a ton of invoice fraud that happens every time. One of those scams happens. It's on the front page where it's like it's a X company defrauded for hundreds of millions of dollars with false invoices. So you already see that like those are critical tasks that humans are still not really good at doing. We have an opportunity to innovate there, right? We have a whole network of vendors. We see all invoices that happen through our platform. We have a Gmail integration where we pull all the context of the actual email and the conversation with the vendor. We also know the vendor's email, so we can verify the vendor's email. We can verify the conversation. We can understand if it was actually, a real conversation with a real invoice. And so at the very least, we can actually flag, and we currently flag labels, right? We basically label every single transaction document on our system to give insights for finance teams to pay attention to things. Then we have a workflow where the workflow takes those events, takes those labels, and based on your configuration, does different things for them. So, for example, a high-paying invoice that has certain fraud labels goes through a secondary review versus a low-dollar recurring invoice that has a verified vendor with an email that is low risk. Maybe that is automatically approved. So that's a little bit of ways for you to etch into that. And then we have reporting where a controller can see, hey, this policy automates 20% of your bills. We recommend tweaking the policy so it can automate 40% of your bills. You would save 15 hours a week, and you would still be very accurate and compliant. And so over time, I think once people get comfortable with these things, your general modus operandum is allows you to basically take more risks with regards to the AI. Just like, we use the internet today, and we're so used to the internet. Before, the early days of the internet, we didn't have a lot of trust, right? We're like, what is this? I don't trust the data I'm seeing. I'm still going to go to a library or talk to my friends when I make purchase decisions. Now we use the internet for all these things. So I think it takes time, and we're leading the way on educating our users and making products that are trustworthy with them.
So I do want to give you an opportunity to talk about the new Treasury product. I know you recently launched that. I'd love to hear about like the genesis of the product, what the product does, where you're headed with it.
Yeah. So for the first 4 years at Ramp, we were focusing on payments, right? We were focusing on the outflows of a company. And in order to underwrite our customers, we asked them to link their financial accounts. So we have a strong understanding of their cash positions at every time. And one thing that we realized was that most of the cash that companies have are stored on like almost 0% interest earning accounts. And we asked ourselves, like, why? Like, these are sophisticated companies. Why are they keeping cash at a low interest rate, especially in a high interest rate environment? Mm-hmm. And it was because most of these companies were founded, in a low interest environment world, and most CFOs or even CEOs are not treasury experts. So they're really focused on like the dollars out versus the dollars in. And then lastly, it's actually a lot of work to figure out where to store your money. You need to understand all the things that are going out of your bank account at every given point, and you need to time the investments that you're making on your cash so that you're not locked up on a money market account that takes 5 days to fund out when you need to pay payroll the next day for your entire employee base. And so the overhead of doing that with like a full-time employee, just the math almost didn't make sense for people. And so we asked ourselves, okay, we know your cash position, we know all of your outflows, right? They're all running through Ramp. How can we build a product that puts basically money on autopilot? How do we make it easier for finance teams to earn money on their operating cash that sits in Ramp and it gets paid out of Ramp? Gives them real-time visibility, gives them instant liquidity, right? So you can make instant payments on Ramp. And puts money in money market accounts and soon treasury accounts so that you basically can time your investments and earn even higher yield on things that are less liquid because we know the liquidity that you need to store on your operating cash. So that was a little bit of the...
Are you also spreading that across organization, across banks in terms of like default risk or anything like that?
Yeah, exactly. Yeah. We saw we lived through the SVB crisis.
Yeah,
that was a whole that was a fun weekend. We know that it's important for them to basically have a lot of security with regards to their deposits. So we partner with a whole banking network where we stack basically FDIC insurance for our companies. And so instead of having the $250K limit, we have tens of millions of dollars of FDIC insurance on the deposits that you store on our network.
I think one of the positive things that came post SVB is that Treasury has been like addressed by fintechs all of a sudden. It hadn't been up until that point, at least not from my perspective.
Yeah, I mean, I think fintechs focused a lot on the consumer for the first part of this like fintech wave, right? And consumers is a tough business because it's very much a brand play. The CAC to LTV is much tougher to play in, and there's a lot less cash to be had here, right? So we're in the B2B space. It's kind of the new frontier where most companies are so unsophisticated. Tools were built. There's a big barrier to entry in this space because you need to understand the finance persona. You're not the target buyer, so all of a sudden, you need to do a lot more research, a lot more partnership with what does an accountant do, what does a controller do, what does a bill pay clerk do, what does a compliance manager do. So the barriers to entry was much higher. And what we're seeing today is that the compounding startup mode of you build one product, you enter the CFO suite, and you're able to build more and more products for that same persona is kind of a winning strategy where finance teams suddenly get a lot of pressure to cut costs, and the best way for them to cut costs is to cut the number of software vendors that they use. And the best way to do that is to just merge all the things together in a single place. And what that gives you as well is, one place for employees to log in, one place for you to see all of your bills and all of your spend. Why do you see receipts for expenses in one product and accounts payable in another? Makes no sense. Agreed.
One of the things we talk a lot about on the show is about, the trust factor within financial services. I think very few other industries have, are built. Trust sells. That's how I've always said it in financial services. And I guess when you insert AI, there's a little bit of, like you mentioned, like the early days of the internet. There's, it took us time to build trust with it. I guess the question I have to you is, as AI is powering a lot of the products that you are introducing to your clients, is there a trust hurdle that you have to get over, or you've already built the trust at the brand level with Ramp?
I think both. I think so. We've built a lot of trust with our clients. I was at a customer advisory board last week, and I asked people, how did you hear about Ramp, right? And half the group in that meeting said, I used Ramp in my previous company, and I just brought it to my new company. And that's a huge testament to the trust we've been able to build, right? The trust around the product works, it's intuitive. And that if there's things that you need to pay attention to, Ramp will flag it. So that's one part. The second part is that AI, there will always be, the curve of adopters, right? So you need to find your early adopters, and you need to partner with those early adopters. So when we go to large companies like a Shopify or we chose those companies. They chose us too, but we certainly chose them. Those were RFPs that we absolutely wanted to win, and it was because the finance leaders in those companies were believed in what we were selling. They didn't want just a nicer interface with a mobile app. They wanted their employees to have time back. They wanted their finance teams to be technology adopters and technology evangelists within the company. So it's really important to find those early adopters. And then, the whole crossing the chasm, I think, will happen through the broader education of the industry on AI, through progressively embedding AI into our products and allowing people to opt into using it. And through strong sales and education, right? So, we launched Ramp Plus, which is our paid offering more than a year ago, and it's becoming basically our AI layer, right? So you basically opt into it. We show you how much time you're saving with AI products, and you pay for basically the automation through software spending. So a little bit of both, and that's why I think we're uniquely positioned to go after this, because hundreds of thousands of finance teams are on Ramp, and they want to basically be educated about what's possible. So it's going to take some time, and I think typically finance is the last adopter for a lot of these things, which goes to show you just how much opportunity we have. But it's a fight worth fighting.
I'm curious also, Geoff, how you manage your internal team of product at product. How do you guys stay on top as the field itself and technology is evolving so quickly? How do you guys stay on top of it?
Yeah, it's a really, really important question, right? PMs.
It feels like it's absolutely accelerated, over the past year.
Oh, it's huge. Yeah. It's huge. Yeah. We basically have a goal internally at Ramp to have 100% of every employee use AI every single day. And we have teams that are basically evangelizing AI products for every single function. Whether you're in sales, how to craft an email, whether you're in support, how to answer that ticket, whether you're in engineering, how to code faster, whether you're in products. So on the product side, there's, what does a PM really do? A PM basically synthesizes customer data, right, and customer insights, which we have a ton of. Every single sales call is recorded. Every single support ticket is stored. Every single survey is being run. All the sessions that people use our product is recorded as well. So we're sitting on a ton of data, and you can throw humans at saying, hey, what was the path that took the most amount of clicks? What was the part of our product that led people to contact support the most amount of time? What was the emotion in the last 100 sales calls? When did people bring up the issue of international, and what are their international needs? Right, all those things are basically now fully automated via AI. So we have basically internal teams that are building those platforms, that are piping that data, that are creating basically interfaces for internal teams to use. And it's making our teams radically more efficient, so that we have to hire a lot less folks, and that's a beautiful thing. Not because we don't like hiring people and giving them opportunity, but more because every single PM can do a lot more, and there's actually a lot more empowerment. With less people comes more autonomy, less bureaucracy, less layers of management, less overhead. What I typically say is I don't want two PMs in a room. When there's two PMs in a room, that means that I've failed in terms of my organizational structure. So that enables people to just have huge amount of scope and can do more faster.
Geoff, we're getting near the end of our conversation today. It's still early 2025. I'm curious what your personal big, hairy, audacious goals are, and what your team's goals may be.
Well, we have a lot.
Ambitious, right?
We're still a small percent of the market in terms of corporate card and expense management. We're less than that for accounts payable. We're less than that in terms of treasury, and those are just maybe 10-15% of a finance team's time. So there's just huge amounts of opportunity. I think, this year we're focusing on a lot of things. We want to be a leader on the travel space and just make it super easy for employees to book travel, to travel, and to do their expenses while traveling. We want to continue doubling down on treasury and operational accounts, and just be the single place where money is stored and moves. We want to play really aggressively in the accounts payable market. We've moved from a corporate card with a bunch of new products that we can cross-sell, to how do we use those actual products and become wedges and go to market, and then cross-sell maybe the card at some point. So that's another piece. And then lastly, we really want to focus on how do we build the front end for finance, right? So every single ask of a finance team, what's my policy? When is payroll running? How do I get paid back? Can I expense this? I want to buy this vendor. Do we have a vendor like this? Can I get access to X vendor? All these things, basically, we want to funnel through Ramp and have workflows and AIs do it for them. So going to like finance adjacent personas like IT, like accounting, potentially HR, those are all areas we're focusing on. And then lastly, it's in order for you not to be disrupted by, the next startup that is AI enabled, we're basically putting teams that are just thinking about, if you were to rebuild this completely in the world of AI, forget every code that we've written, forget every single user interface, what would this look like in a world where models are 10 times more effective than they are today? Because they will be, right? How would you actually build this? And so
like
really
creative destruction in a way. Yeah.
Exactly. Disrupt ourselves here, right? Mm-hmm. There's the classic thing of like, if you don't build the thing that kills you, someone else will. And rethinking design interfaces, right? Why do we have tables and drop downs and fields and filters? Rethinking, data and how we store data, and rethinking just the conversational aspect of software. So it takes a lot of humility, right, around rethinking how you build software. Because if you just say, hey, like this is the things that made us successful, let's continuing that thing, you'll wake up in a couple of years and you'll have finance teams that love other products. And so it's important to stay, very, very focused and constantly asking ourselves what will kill us and build that internally.
Geoff Charles, Chief Product Officer at Ramp. Thanks for joining us on the Tearsheet Podcast today.
Thanks a lot, Zach. This was fun.